Happy Monday, everybody. I hope you had a great weekend. As I mentioned in Friday's video, the return of volatility is in the air. As I've said a few times, as the traders are out enjoying the last of the summer, volumes are lower in trading and swings are greater. As you've seen in the past few weeks, this is all true. Today is August 19th, 2024, and of course, this is your Monday market update. As we do here each week, I'm going to recap last week and we'll preview the week ahead. I'll just take a moment to remind you that as detailed as I get here with this video, the key is to keep our eyes on the goals. In most cases, these are the long-term goals. Last week's Friday video was full of some ideas on how to prepare for times like this. I recommend you take a look. This coming week's going to see some more of those. Let's jump in. Monday, the markets did gap open higher, but there was no follow through, and the U.S. equity markets experienced a relatively quiet session with minimal movements as traders remained cautious ahead of the key inflation reports, including producer price index and consumer price index, both scheduled for later in the week. The Dow ended down 1/3%. The S&P ended relatively unchanged, edging up by less than 1/4 point. And the NASDAQ also up 0.25%, led by a 4% gain in NVIDIA as markets started to think that AI revenues will produce earnings and profits, something that seemed to be questioned again the week prior. Oil was up again on escalating tensions in the Middle East. Copper, gold, treasuries, and the dollar were all relatively stable as recession fears again are also being forgotten. Overall, the markets were focused on the upcoming data, and we can move to Tuesday. Markets resumed their upward momentum, driven by a cool producer price index report, which fueled dovish money flows and boosted investor sentiment. The lower than expected PPI data and reinforced expectations for a potential 50 basis point rate cut by the Federal Reserve, supporting risk-on behavior in the markets. Get this clear, as of Tuesday, markets are about a 50 basis point cut, September. Try to keep score. Spoiler, this changes a few times just in the week. And more to come, I'm sure. There was mixed eco data from overseas, including a disappointing German ZOOF survey, kept stock futures relatively flat. However, a strong small business optimism index and the favorable PPI data did ignite a rally in the U.S. equities. Commodities, however, traded lower despite the gains in equities. Crude oil fell by 2% due to concerns about oversupply, following a cautious industry report from the IEA, which projected a potential surplus in the oil market next year. Copper also declined, reflecting worries about the health of the global economy. Got that? Yesterday, recession fears are fading. Today, worry, just keep score. Gold, on the other hand, managed to eke out a modest gain, benefiting from weaker U.S. dollar and continued bid of the Treasury market. The overall market sentiment was kept as risk on by expectations of a dovish Federal Reserve, but concerns about global economic growth did remain a point of caution. By the end of the day, the Dow was up 1%, S&P up about 1 2/3%, and the NASDAQ was up almost 2.5%. On Wednesday, CPI hit and the take and the markets gapped higher. By the end of the day, the stock market showed a mixed performance with initial gains following the release of the July CPI. The headline fell below 3% for the first time since 2021, sparking some early optimism. However, the core CPI remained elevated at 3.2%, dampening enthusiasm as it suggested inflation was still above the Federal Reserve's target. The market brought in some dip buying and a strong performance in the financial sector, particularly among insurance companies like Progressive and Berkshire Hathaway. Commodities saw some declines, particularly in gold, which fell as hopes for a 50 basis point rate cut in September faded. Got that? Not 50 anymore. 24 hours, the change. Not even. Oil prices also dropped due to a bearish build in crude oil inventories. The U.S. dollar remained relatively stable while Treasury yields fell slightly, reflecting the market's cautious stance on inflation and economic growth. Overall, while the CPI data did reinforce expectations of a Fed rate cut in September, it was not enough to significantly boost markets, and the focus remained on the upcoming economic data and the Fed communications to determine on the market's next moves. More on all of that soon. Dow closed up a bit over 0.5%, S&P up about 2/3%, the NASDAQ was just a hair over flat, at least on the positive side. Stocks gapped higher again on the open on Thursday. Earnings and eco news all lined up to be a risk-on tone, supporting the case for the September rate cut. Back to that. Again, 24 hours later, here we go. Cisco and Walmart had better than expected earnings in the two big eco numbers, jobs and retail sales. Jobless claims lower than expected, and retail sales that blew the expectation away, making us wonder what some of these companies are seeing. Consumer slowing did not come in that report. Overall, rate cuts are still expected in September, but debate is still ongoing as to what it will be, 25 or 50. Key from the data, in line what I have been telling you, economy is losing momentum, but does not seem to be falling off a cliff. Fed speak was with the company line. Base case for September cuts. Bulls took it and ran. Commodities also saw gains, particularly in the industrial metals and oil, while the U.S. dollar and the Treasury yields moved higher following the strong economic data. In summary, the market outlook remained cautiously optimistic, with a soft landing still seen as the most likely outcome, though the strength of that signal has weakened somewhat. By the end of this festive day, the Dow was up almost 1.5%, S&P up a bit over 1.5%, and the Nasdaq was up 2.33%. Going into Friday, markets were up between 2.5% and 5% on the week. Stocks opened lower on Friday. Wait, is that a typo? No, seriously, it actually opened lower. University of Michigan survey had sentiment up more than expected, and 1 and 5 year inflation outlook stayed steady. Markets did stabilize, but that did not come from some of the bears. It did not stop some of the bears from coming out to play. J.P. Morgan published a note that on the heels of the Japanese 12% down decline of last week and the 10% up move, the move down a couple of weeks ago here in the U.S. markets are, quote, the dress rehearsal, close quote, in their words, from what is yet to come. Yen carry trade is not done, they say. Again, more on that soon, and a possible economy that slows more than expected. There are as many bearish notes as there are bullish notes, it seems. As of Friday, 93% of S&P companies have reported, and about 78% beat expectations. It's a bit ahead of averages. By the end of the day, the selling did not hold, but the markets went into a holding pattern into the weekend and this coming week's news. I'll get to that also in just a moment. Stocks closed higher, capping off the best week of the year. All three, Dow, S&P, and Nasdaq, all up about 0.25%. For the week, the Dow was up almost 3%, S&P 500 gained nearly 4%, and the Nasdaq rose 5.25%. This, of course, capped off a 2-week period that made us ask, there was a sell-off? What sell-off? Let's talk about what is coming this week and why we need to watch it closely. If you can hear anything else, you will hear some earnings, Lowe's, Target's, Palo Alto. If you listen closely, you can hear some of the Fed heads, Waller, Bostic, and Barr. You'll get some minutes from the July meeting. And unlike some of the other minutes, this may tell us something. But front and center from now until Thursday, the DNC is here in Chicago, and that will be a complete 24-hour news cycle. Not sure there'll be much news made. When Harris steps to the podium, you should be ready. That will be Thursday. All eyes will move from Chicago on Friday out to Jackson Hole, Wyoming, where the Fed will be meeting, not a real Fed meeting, but a meeting of Fed people. And Jay Powell will make big news, which he made big waves at the speech from there last year. So watch for that on Friday. Yes, Thursday you'll get a slew of eco data and labor data, housing, PMI, manufacturing and services, and the jobless claims. But you will have to listen really closely to hear those. The FOMC minutes and Powell's speech, unless Harris really says some things we don't know, they will be what the market watches this week. And before you make your decisions on Friday, remember that next week we'll get a bunch of eco data for the Fed to discuss when they're done vacationing in Wyoming. As I've said, watch for volatility. As desks get full again, volumes will come back, and we'll have to see who is offsides and who is not. Please, as always, stay in touch, keep an eye on the goal, and have a great week.